Arguably, one of the funnest names in patterns is the dead cat bounce. And traders love dead cat bounces. It's a continuation pattern, so it's going to continue whichever way that trend has been headed before. And they love it, not just because the name's kind of funny, but it's actually a very good trading indicator, as we'll see here coming up. And they're very rare, actually. When you see a dead cat bounce, sometimes you'll see forums or people who are talking about trading say, oh my gosh, it's a dead cat bounce. And or it seems like it's forming. Watch out, it looks like a dead cat bounce. So you'll see some of that out there. But because it's rare, but the reason that traders love it or like it is it's very consistent. It's one of the more proven patterns out there. It's a very consistent pattern. And it includes a gap as part of the overall pattern. There's a gap in prices, as you'll see when we walk through how this works. And a gap by its nature is a very strong indicator as well. So you have an indicator that as part of the indicator has a strong indicator built kind of right into it. So that helps to make it very, very consistent is the idea of a dead cat bounce. So let's look at a dead cat bounce and how that kind of works, because it's a chart pattern that'll take a little bit of time to form because certain conditions have to be met along the way. So what happens is you see this, we're going from left to right, of course, with our time farther back in time to the right, more recent times, and prices, high at the top, low to the bottom. So what we're seeing here, you can obviously see that there's a downtrend, right? Remember, whenever we're trading chart patterns, there has to be an established trend. So what we're seeing here, and this is a dead cat bounce, there's a downside breakaway gap. So you can see the three bars to the left, the three price ranges, and imagine before that there was an established trend too. And then all of a sudden there's a downside gap, right? There's a big gap in prices. The lows of the previous day were well broken and went to even lower lows, and we have a gap in prices there. Review or take a look at the lessons around gaps and trading gaps. We'll learn more about gaps. But the whole idea is there's something's happened. There's some type of big bad news or something happened to cause a big drop in prices. And then typically for a dead cat bounce, you want to see a dramatic drop. It's not a small 2, 3, 4% breakaway gap or big drop drop. You were looking for something like 25% or even up to 70% drop. You're looking for some really bad things to happen. Your cat is dead, unfortunately. And so you have this big gap. So look for a big gap of like a 25 to 70% price drop. And then it basically, forms this, it goes in this now new, even steeper downtrend. And then it reaches a bottom of the downtrend and it hits the floor. Your dead cat hits the floor and it bounces. So you see there's another breakaway cap off the bottom where it bounces up, right? The prices have now made a leap up. And it doesn't have to be a dramatic leap up, just that there's a gap that's formed. The idea is that it's gone. You've had a downside gap. Things have gotten even worse. It keeps going down, down, down. It looks terrible. And then it bounces off the bottom. And then it starts going up. And so it's a the idea of the formation of the dead cat is it's a short-term thing. It doesn't reach the original price gap prices. It doesn't, see how it does, when it reaches its peak, it doesn't go above the prices or above where that original gap was back to the original, let's say 3 downward lines there on the far left. It's going to kind of start to approach that, but then it's going to turn around again. Again, a dead cat bounce is a continuation pattern. So it's going to resume that strong downtrend. But the idea is something's bad happened, drive it down, and people are looking at it as it hits the rock bottom and bounces. They're saying, this is way too low. Maybe this has been oversold. Let me buy in, and then you get more buyers, and that has the bounce. That's your breakaway gap. That's the bounce. So the idea is you want to trade on the bounce, but be ready to get out, right? So you're seeing this happen. It bounces up. You see a breakaway gap. You need a breakaway gap going upwards, not just a trend going upwards. You need a breakaway gap going up to be a dead cat bounce. You trade on that, short-term trade. But you're ready to get out, especially as it starts approaching that first breakaway gap to the downside or approaches the last kind of low in the previous downtrend low. You want to get out and take your profits, because what's going to happen with a dead cat bounce is it's going to reverse, or basically this temporary bounce, this temporary reversal is going to go back to the original downtrend. So be ready to get back out. You can have the exact opposite of that, and that's even rarer than a dead cat bounce, which is an inverted dead cat bounce. Just imagine this, but you're in an uptrend, and all the same concepts apply. is just in an uptrend is what would be happening. Again, very, very rare, but if you see that, you can kind of trade appropriately around that. So the idea of the dead cat bounce is it's a short-term kind of profit opportunity. And that's why a lot of traders like it, besides the funny name, is they can get in and get some profits, but they're really watching it closely for any sign of a turn that might be turning back down to that downtrend, and then they get out right away. With a dead cat bounce, you want to trade on the bounce as it bounces off the floor. You don't want to go back into that downtrend because the downtrend is going to keep getting worse. It's going to go past that floor and start creating new floors on this bad downtrend. So dead cat bounces are good trading opportunities, but just be aware of how to trade them. That's the real key part, is that you're trading the dead cat bounce. It's not something you would hold for long periods of time. You're just trying to trade on that bounce, get in, get out, make some profit.